In the upcoming years, are you going to retire? If so, do you believe that you have enough materially to support your way of life? Well done if your response is affirmative, but you should definitely keep watching if you want more. Before we begin, though, please make sure you subscribe, hit the like button, and enable notifications if you enjoy this kind of content in order to stay informed about any updates about Tesla stock news. According to a groundbreaking analysis, its stock price could climb to an incredible $1,000 per share by 2026, significantly above its current worth of roughly $200. Based on projections over the next 5 years, there could be $1 trillion opportunity in autonomous driving. Tesla would be in the lead if they could capture even a small portion of this enormous market. How much would you be willing to risk on this automotive superpower if you were to invest in Tesla shares right now? In the electric vehicle sector, Tesla has emerged as a leader, fostering unmatched creativity and paving the way for even more groundbreaking innovations. The company works to make its products as affordable as possible, in addition to producing excellent products. With these lofty objectives, Tesla looks set to overtake all other automakers in the world by sales in 2026 or 2027. It could be wise for investors to raise their investment recommendation from a hold to a more enthusiastic buy, given Tesla's present values and prospects. Let's investigate why. Hi everyone, and thank you for returning to Tesla Tomorrow. Despite the introduction of many competitors, Tesla has been able to maintain a significant market share in the quickly growing EV business. Tesla has maintained its position throughout time, and as the market continues to grow, its dominance is probably just going to increase. Tesla has demonstrated that it is a very profitable company, in contrast to some of its competitors who have financial difficulties. As a result, its stock is a desirable long-term investment. Tesla has completely rewritten what it means to be an automaker. In addition to making electric cars more well-known, the company has completely changed the way it sells them by going direct to customer rather than through conventional dealerships. Furthermore, Tesla has eschewed traditional advertising in favor of obtaining press attention and utilizing word-of-mouth promotion. These audacious bets have paid off handsomely, enabling Tesla to reach unprecedented heights. Tesla continuously creates significant consumer demand with its premium brand image while cutting costs that traditional automakers ignore. Industry analysts predict that during the next 12 months, the average price estimate for Tesla stock will be approximately $218.95 per share. But while some forecasts fall to just $33.33, others leap to $430.33. Let's talk about the money side of things now, though. The average monthly cost of living in North America is about $3,000. When additional expenses like travel and medical care are factored in, this amount comes out to about $5,000 a month or $60,000 annually. Therefore, to live a pleasant life for the next 33 years, you'd need roughly $2 million. What does this now mean for Tesla's share potential and your retirement? Given Tesla's present market value, it appears likely that this stock will be a wise investment in the upcoming years. It is anticipated that Tesla will keep growing for a number of reasons. In the near future, investors should be aware of two potential catalysts that might have a significant impact on Tesla. First off, exceptional delivery numbers point to a strong indicator of higher than expected vehicle demand. Furthermore, Tesla is outperforming analysts' estimates in terms of profitability at the gross margin level. Long and medium-term financial prospects for the company are promising due to these encouraging improvements. The possibility of a sharp rise in the rate at which electric vehicles are becoming more and more common is one of the main reasons for Tesla's optimistic outlook. Although the market's current projections for EV adoption in the US by 2030 range from the mid-40s to the mid-50s percentage points, a Needham & Company research study indicates that manufacturers might have considerably greater goals in mind. The survey states that by 2030 or 2035, most automakers want to have 100% of their sales come from electric vehicles. This suggests that analysts may have been unduly conservative in their projections, allowing for favorable surprises in the future, which would be advantageous for Tesla as the industry leader. Future success for Tesla will depend on more than just rising auto sales. Over the years, the company's revenue from other firms and its services has grown significantly. In the future, there will undoubtedly be more space for growth. For instance, Tesla has Signif. Given these aspects, it is anticipated that Tesla's profits per share, EPS, or bottom line, will increase quickly in the future, possibly even surpassing its growth in revenue. The possibility of a capital return to shareholders and operational leverage are the main drivers of this optimistic forecast. In the third quarter of 2022, Tesla's capacity to profit from positive operating leverage is clear. Tesla demonstrated its ability to raise profit even in the face of a relatively small 2.3% increase in operational costs relative to the company's noteworthy 55.9% revenue increase. This is an example of how positive operating leverage helps Tesla's finances. Repurchasing shares of the company is another way to increase its potential EPS growth in the future. In the Q3 2022 earnings call, Tesla highlighted that, even in the worst-case scenario, they could repurchase $10 billion. With 491,000 vehicles sold in the U.S., Tesla has been a major player in the market. Consequently, Tesla has surpassed BMW, which had held the top spot for the previous 3 years, to become the U.S. leader in luxury automobile sales. BMW sold just 332,388 cars in the country in 2022, dropping them to second place. In 2022, Mercedes-Benz ranked third with 286,764 sales, and Lexus finished in second with 258,704 sales overall. Not only did Tesla surpass these well-known companies, but it also made history by being the first American carmaker to be ranked number 1 in 25 years. Going forward, it is anticipated that Tesla's unit sales in the United States would continue to rise, with $20.69 billion in estimated revenues in 2023. It is also expected that the company would continue to grow at a rate of 3.97% per year, which will lead to a predicted market volume of $19 billion by 2027. Morgan Stanley analysts see an appealing entry position in the current upward trajectory of Tesla shares. The company had earlier changed its price target from $330 per share to $250. This change was made to account for the possibility that Tesla may not be able to provide the anticipated demand for EVs in the future. Adam Jonas, an analyst at Morgan Stanley, recently reaffirmed his overweight rating for Tesla stock. According to Jonas, Tesla has a chance to succeed even in the very competitive EV industry. He says there's a strong chance self-funded firms like Tesla that have created size and effective supply chains will succeed in this market. Tesla's stock price may reach an astounding $1,000 per share by 2027 if the business maintains its current growth trajectory, as evidenced by its incredible quadrupling in just 4 years. An analyst with Morgan Stanley predicted back in 2022 that within 5 years, Tesla's revenue will top $300 billion and eclipse that of both Ford and General Motors combined. Morgan Stanley predicts that by 2027, Tesla's revenue will surpass that of both firms combined, despite the fact that it may appear impossible for Tesla to beat such industry titans. Analysts predict that Tesla's rivals' marginal growth shares will drop, and Tesla will absorb this decline. They predict that by 2030, GM's unit shares may fall from 14.6% to less than 12%, while Ford's market share may drop from 12.5% to around 10%. By contrast, by the end of the decade, Tesla's wallet share might rise to 23%. Additionally, Morgan Stanley projects that by late 2026, Tesla would surpass GM's revenue share from new car sales, and by 2030, with estimated revenue of $300 billion, it will surpass the combined market share of both Ford and GM. Morgan Stanley concedes that by reducing their scale and profitability, Ford and GM can continue to be significant players in the electric vehicle ecosystem. They do, however, issue a warning about possible hazards for these established manufacturers, including growing labor and material costs, and the implementation of expanding future EV model introductions. Although Tesla's stock has underperformed recently, the long term picture is still favorable. Based on its forecast compound annual growth rate for key financial measures, Tesla is expected to maintain its rapid growth over the next 5 years. Furthermore, after the stock price spike early this year, Tesla's values have become more fair. All signs point to Tesla continuing to grow quickly, even though investors may have doubts about the state of the market and Tesla's capacity to continue making money on cars, even in a difficult economic climate. This idea is further supported by the predicted compound annual growth rate for its net profit, free cash flow, and top-line revenue. Thus, the issue still stands. Would it be prudent to invest in Tesla shares for retirement? Please leave your comments here, along with your assessment of Tesla. Make sure you click on the following video on your screen if you'd like to catch up on the most recent Tesla news. I'll see you over there.